Good morning. I am Malik. If you are listening to this, you survived the weekend, but do not get comfortable. The market you left on Friday is not the market you are entering today. Let's look at the scoreboard from Friday's close. The KSE-100 index settled at 18,409, down 1,133 points. The broader market? Even worse. The KMI-30 dropped 2,263 points, and the volume? 1.03 billion shares. Now, novice traders look at that volume and say, wow, lots of buyers. Wrong. When the market drops 1,100 points on billion share volume, that is not buying. That is liquidation. That is a fire sale. That is the smart money handing their heavy bags to the retail herd before sprinting for the exit. Friday was the warning shot. Today is the invasion. Over the weekend, the Malacca Strait situation didn't just escalate, it solidified. We are looking at a full-blown logistical blockade. And for a country like Pakistan, which imports its energy and its inflation, this is the nightmare scenario. Let me explain why you need to be scared today. It's not about the index number, it's about physics. We have two choke points in the global energy trade. One is the Panama Canal, useless right now because of the Venezuela conflict. The other is the Strait of Malacca. As of this morning, freight rates for a VLCC, very large crude carrier, from the Gulf to Asia have spiked 45% in 72 hours. Why does this matter to your portfolio? Because Pakistan doesn't have a buffer. We live ship to ship. When freight rates go up, the landed cost of diesel, petrol, and palm oil goes vertical. This means CPI, inflation, is about to scream higher. And when inflation screams, what does the state bank do? They hike interest rates. The market was pricing in a rate cut for February. That dream is dead. If rates stay high, technology and cement stocks cannot breathe. They run on leverage. They run on cheap money. That money just got expensive. So if you are holding Systems Limited or Lucky Cement hoping for a pivot, wake up. The pivot is gone. Let's dissect the corpse of Friday's trading session. I want you to look at the advance decline ratio, 162 advancers. 271 decliners. The market was red, but the quality of the selling was terrifying. Look at WorldCall Telecom, WTL. It traded millions of shares, closed at 180. Retail traders are buying it because it's cheap. Let me tell you something. 180 is not cheap for a company that burns cash. It is expensive. If you buy WTL at 180 and it goes to 170, you lost 5%. Do not mistake low price for value. Now look at the banks. Mizan Bank, MEBL, down to 482. McKay Bank, down to 439. These are the pillars of the index. When the pillars shake, the roof comes down. The foreign funds are selling banks to cover their losses in emerging markets. Do not step in front of that train. But amidst the wreckage, there are survivors. I told you on Thursday, I told you on Friday. The trade is energy. Look at the refinery sector. While the market crashed 1,100 points, Attic Refinery, ATRL, closed at 754.79. It hit a high of 775 during the session. Why? Because when the Malacca Strait chokes, the gross refining margin, GRM, on diesel explodes. Pakistan needs ATRL to run at 100% capacity. It is a national security asset right now. My target, if ATRL holds 750 at the open today, we are going to 800 by Wednesday. And look at the E&Ps, exploration and production. OGDC closed at 293.11. PPL closed at 240.28. These stocks are dollar hedged. If the rupee crashes because of the oil shock, these stocks go up. They are your insurance policy. If you are sitting in cash, this is where you park it. OGDC, PPL, ATRL, everything else is noise. Important news. Listen to me very carefully. This is the most important update of the year. We have confirmed reports, and verify this yourself, that the Saudi stock exchange, Tadawul, is opening its doors to all international retail investors starting February 1st, 2026. Before this, you needed millions of dollars or a special license to trade Saudi stocks. Now, anyone can buy Saudi Aramco, Al Rajhi, or Aqua Power directly. Why does this kill the KSE-100? Think of the overseas Pakistanis. For decades, they poured their savings into the PSEX because they had nowhere else to go in the region. Now they have a choice. Option A, invest in Pakistan, currency devaluing, political chaos, Malacca blockade. Option B, invest in Saudi Arabia, pegged currency, Vision 2030, global boom. Where do you think the money is going to flow? We are about to see a massive capital flight from Pakistan to Saudi markets. This is not just a red day. This is a liquidity drain. Anyway, now let's look at the calendar for today, Monday, January 12th. There are traps set for the unwary. Trap number 1, National Foods, NAFT. They have an AGM today at 3 p.m. in Karachi. The stock closed at 419.62. Normally, an AGM is a non-event, but with palm oil prices skyrocketing due to the shipping blockade, their margins are under attack. Do not hold NAFT through the meeting. If they announce cost pressures, the stock dumps at 3:15 p.m. Trap number 2, First National Equities, NFEL, AGM at 4 p.m. in Lahore.
This is a speculative stock, closed at 18.24. You will see rumors floating on WhatsApp groups today. Big news coming at the AGM. Ignore it. In a bear market, rumors are used to create exit liquidity for the operators. Do not be the person buying their exit. So, here is your battle plan for the next 4 hours. 9:30 a.m., the margin call wave. The market will likely gap down. Brokers will force sell anyone who held positions on leverage over the weekend. Do not buy the first dip. Let the bodies hit the floor. Wait until 10:15 a.m. 10:15 a.m., the sniper entry. Look for Attic Refinery, ATRL, and National Refinery, NRL. If ATRL is trading above 755, you buy. If OGDC is near 290, you accumulate. The do not touch list: World Call, WTL, K Electric, KEL, Airlink, AIRL, Systems, SYS. This week is not about making a fortune. It is about keeping your fortune. The peace trade is over. The war trade has begun. Adjust your mindset, tighten your stops. I'm Malik. The market opens soon. Good luck. Disclaimer: Stock Sense is an educational platform. I am an analyst, not a financial advisor. The strategies discussed here are based on data and market speculation. The stock market is a high-risk environment. Do not trade money you cannot afford to lose. Do your own research.